Welcome to another episode of the Property Prescription. Today on the guest list, we've got Belinda Hudson from William Buck. Belinda, great to have you on the show.
Thank you.
A bit of background about you. We've presented with you in the past. You're a fantastic presenter. I think with our doctors, you give them assurance around what they should or shouldn't be doing when it comes to their tax structuring, but a little bit about your background and how long you've been around for. It'd be great to hear from you.
I'm not sure you want to know how long I've been around for. My name's Belinda Hudson. I'm a partner in William Buck in the Melbourne office. So William Buck is a mid-tier accounting firm. We've got offices in most of the states in Australia. I'm the head of the health team, so specialising with lots of doctors, specialists, dentists, anything else really that fits into the health space. So working with a lot of doctors, dentists, specialists over the last, let's say, 30 years.
And talk about the last sort of 3 to 4 months in terms of the amount of workflow. How stressed are you, first of all? What are your doctors and dentists and medical specialists saying to you at the moment? And what are you seeing? Probably the biggest question is, what are you seeing some of the mistakes, and are you seeing any urgent reactions and behaviours out there at the moment?
I actually think it's been yes, it's been stressful, and yes, the budget period was really stressful, but I'm actually feeling it's calmed a little bit down, I think. And I don't know whether that's just our clients are calm because we're calm, but I am having conversations with other people, and there's a lot of, I think people are smart enough to work out that we don't have all the answers yet, and they're kind of waiting to see what the eventual legislation will be for the trust structuring part of it. We kind of know the capital gains part, but the other part.
Yeah, everyone's talking about capital gains and negative gearing.
Yeah.
But I think the big one coming into effect in 2028 is the structuring part.
The taxing of trusts, yeah.
Yeah, let's dig a bit deeper on that. So what are you actually seeing? What are you actually advising your particular medical specialists on that at the moment? And preparing them, planning them?
It's interesting. I think so for probably the last 12 months, 2 years, we'd already been moving to setting people up in companies rather than trusts, just because it gave you a different tax outcome and depending on the situation. But we are still using trusts for a lot of clients because tax is not the only consideration we use when we're looking at structure. There's a lot of other things we look at. So a trust may still be the right answer, and it may still be that if you've got a trust in your structure now, there's no need to change that. We may continue on with that, but the big thing will be everyone who has a entity in their structure is going to need to review it and make that decision with all the information. Yeah.
Absolutely spot on. And some of the things, like these doctors have been planning these structuring and buying their medical practice for the last 10 years. Is there anything that you're finding that you have to unwind or restructure as a result?
Not yet. I suspect we will.
Yes.
I think we have been a number of clients, we've been moving from trust to companies already, and we've been going through that process mostly for them to unlock funds in their business and things like that. Or if I've got one at the moment where they potentially want to bring someone else in and they've got a discretionary trust, which they can't do, so they need to move it to a company structure. So there's a business reason for doing it.
Yeah. Yeah. And on the SMSF, this is another change that came in at the last minute. 10th of August, I think they're shutting down on sort of residential LRBAs, which, a lot of our doctors, we don't want them rushing in buying the wrong particular type of asset, but just talk to us about some of the changes that you're seeing on the ground with SMSF.
Yeah. So I think the majority of clients that we deal with, we're probably putting commercial properties into their self-managed super funds anyway under LRBAs, not as much residential in their self-managed supers, particularly with the medical practitioners, because they have those premises there that they want to own and they want it in there for long term. So I think that's probably where we'll see the shift, people trying to do that even more.
And the other idea is a lot of our doctors are talking about buying commercial property within their SMSF, whether or not it's their medical practice or a pure commercial investment. Some of our doctors are coming to us and saying, Phil, what can I actually do to that particular commercial asset? Can I extend it? Can I put another room in? What can I do? So you want to just talk to us about the do's and don'ts of a commercial property around the SMSF, because it is quite dangerous and we do see it a lot.
Yeah, so I think the most important thing with if you're buying a property in a self-managed super fund is you get advice before you buy it, particularly around what you can and can't do. One of the bigger issues that we see with clients is that they buy a residential property, they knock it down or they renovate it, and then it becomes a commercial property. So there's that change in structure.
Correct.
And because of the LRBA rules, it has to be a single acquirable asset, which means that you can't substantially change it. So if you want to do work to it, you have to fund that from within the fund. You can't fund it as part of the LRBA.
And we've seen structures in the past where a company might buy a partial amount of the property and the SMS might buy the other half. Are you still seeing a lot of that type of activity?
Yes, you've just got to be really careful about how you do that because there's restrictions on what you can buy and what you can put into the self-managed super fund.
Absolutely.
And you've got to make sure it's all done at market value and there's stamp duty implications and all those sorts of things. So, yeah.
And the other thing is valuations. Valuations has been a big one for us.
I think it's going to be a big one for us too.
The market assessments, we're calling them market assessments, but talk about the different types of rulings and how you would look at that as an accountant, how to do things properly and by the book. So just talk to us about that.
Yeah, so with the valuations, the ATO have actually been really strong on pushing back on valuations. So we used to be able to get a valuation from a real estate agent that said, I can sell it for this much. Now, any valuation that you use for tax purposes needs to have appropriate comparable sales to measure against so that there's evidence of how you've got to that valuation. We've actually seen that ATO reject valuations and we've had to go back and get proper ones done. So there's a lot more requirements that need to be done, but as long as you tick those off, you can actually
get through it.
Yeah.
So can it be a valuation or a market assessment? Because this is the real grey area there that we're seeing and getting asked from our doctors. Is it a market assessment if we give them the comparables evidence, or does it have to be a formal valuation? This is where we're unsure on our side.
Yeah.
We've done market assessments over the years for commercial and res. But with the SMSF auditing, just got to be careful.
So the issue is that the ATO are putting pressure back on the auditors, so they're putting pressure back on the SMSF members. So because everyone's trying to cover themselves, I guess, and for the auditor to rely on it, it may be that the auditor's specifying that it needs to be a valuation for their own assurance so that they can satisfy what the ATO need.
Yeah, spot on. Yeah, it is a very grey area. And we had a couple of questions from our Property Investing for Doctors Facebook group. We've got a few nationally and they're all over the country and different specialties. So I might read you one. So let's talk about commercial property. We had a question from one of our guests. Everyone has read that commercial property escaped this budget. Walk me through why that's only half true. What actually changed for a doctor holding a commercial investment property in their own name?
So from a commercial property, it escaped the negative gearing changes.
Yes, it did.
So you can still negatively gear a commercial property. That's unchanged. It hasn't escaped the capital gains changes. So they still apply. You will need to get valuations done on those properties to work out the movement going forward. But there's a lot of other reasons as to why you might or might not hold a commercial property in your personal name. You might hold it in a self-managed super fund, a trust, a company, lots of different reasons why you would hold it differently.
Yeah, and it needs to fit into the overall doctor's long-term strategy as well. There's commercial, residential. There's even everyone's flying to newly built property now, and I think that's a very scary thing to do. And a lot of our doctors are talking to us and saying, Phil, do we go and buy a newly built property versus established? But they all hold and they've got to stick to that doctor's strategy. Are you seeing a lot of doctors buy new property at the moment?
There has been a little bit. I think one of the things I probably caution is I don't think we're still 100% on what the definition of the new build is.
Correct,
yet.
yes. So,
so that it wasn't quite in the legislation as such. So I think there will still be stuff to come out. I expect what the ATO have done in recent years on their changes is they release what's called a practical compliance guide. I feel like that's going to come out in probably the next 12 months and we'll get a bit more detail.
Yes. Haven't quite thought it through and the attention to detail is lacking. And there's just a lot of our doctors that are just unsure. They're trying to do the right thing, but they want it structured and they want the right advice. We had another doctor the other day saying, Phil, can we go and build a granny flat? Does that qualify as a
great question.
new property? And it's questionable. There was someone mentioned in government, and they didn't actually even have the question.
I don't think they would know.
Correct.
Yeah, they wouldn't have thought about that.
Correct. So there's all these little, is a unit block, for example, a residential unit block falling under a commercial loan. Is that a residential established? If you're going to develop that unit block, where does it sit?
Great question.
So we still don't know. We still don't have the answers for that. Neither do you. So it's just something that we just need to tread carefully and make sure that we wait until government come out with that update. All right. I've got another question for you. Two doctors buy identical $2 million buildings. One occupies as its practice. The other leases it to an unrelated tenant, so completely unrelated. Fast forward to the sale after 1st of July 2027. How different are the two tax outcomes?
Yeah. So I'm assuming in that question they're asking about the small business
Spot on.
concessions. Yeah. Under the small business concessions, you have to have what's called an active asset. That's one of the requirements. And an active asset means that it's an asset that's used in a business. Now, that doesn't necessarily have to be your business. It could be another business. But if it's your business, it's a lot easier to work through. But you have to be in business as well to access the small business concessions. So there needs to be a link between the two. So if you were holding your own premises, sold them, you met all the asset thresholds and the income thresholds, then you could still access the small business concessions. Potentially, if it's just a passive rental and you're not in business, you don't have the turnover, etc., you wouldn't be able to access the small business concessions.
And what are those thresholds? Because doctors, what are the new thresholds? They're always asking me every year.
So there's the $6 million asset threshold, which means that your net assets need to be under $6 million. And there's the $2 million turnover, which is the one they've just increased to they've just gone up to 10 million. I was actually just talking to a client. They're like, I think we can get it now. Like, no, you're over. The 10 million, that's just gone up to 10 million. The interesting thing is that 10 million threshold doesn't flow across to any of the other thresholds. It's only that one. So
it's a small little gap. But for the people that are within that gap, there's been a real win for them.
Yeah.
But I still don't think it resolves there's a number of other issues outside of those particular thresholds as well.
Yeah, small business concessions are one of those ones where it's kind of easy to say, oh, I access the small business concessions. But once you actually get into the conditions, there's 4 or 5 steps, but then within each of those steps, there's a multitude of different things, and you could go this way and then veer off this way.
Correct.
So it's not a straightforward yes or no answer.
Yeah, and I think doctors need to be really, really careful. They need to get your advice. You've been fantastic with our clients over the years, and I just think it's really, really important. I think the key metrics now and the key themes that we're seeing through is cash flow. You need to manage your cash flow, whether you're building a portfolio or buying property. Getting good structuring advice, whereas you come in. And structuring is going to be a key issue over the next 2 to 3 years.
I think record keeping is going to be massive as well.
With our doctors, this is creating
it was interesting because we were talking the other day about how everyone's going to need a valuation on the 30th of June 2027. You don't actually need to have it done on that date.
Yes.
So it just needs to be valued at that date. So it could be done retrospectively as long as it's valued at.
Okay, so that's
that date.
Very, very important point.
Just so all the valuers can just go like this. They don't have to be up late at night on the 30th of June.
Well, valuers thought it was a dying industry 2 to 3 years ago, and now accountants are going to be more busier than ever and valuers will be more busier than ever.
Yeah, and we're probably going to have to do valuations on businesses as well. Yeah, because that's essentially an asset.
Yeah, so good for you. Is it good for you?
It is, but it's also we'd rather be doing other things with clients. We'd rather be helping them grow their business rather than dealing with this.
It's a lot of admin work by the sounds.
It is a lot of admin work.
That's the thing. So we have to be really careful from our end and both your end. So I think we'll finish it there. But my last question, any mistakes, anything that doctors shouldn't be doing over the next 12 to 24 months that you're seeing on the ground? It'd be great to sort of get your take.
Yeah, I think the big thing is just not reacting and making a decision without thinking it through and without looking at your structure in the whole totality of it. You need to sit down and look at everything, not just that one specific, not just say, I've got a trust, I need to move it to a company, or I've got a self-managed super fund. You need to look at everything,
absolutely,
including your estate planning, your wills, everything, to make sure that it all works out the way you want it to.
Yeah, and don't just buy property or actually
Yeah.
develop a property strategy for tax
For
reasoning.
tax reasons, yeah.
Buy the asset because it's a good quality asset
Yeah.
and it fits within your overall 20, 30
Absolutely.
year portfolio. So
Yeah.
fantastic. We'll finish it there.
Thank you.
Thank you very much, Belinda. That was
Thank you.
fantastic.
Thanks, Phil.
Cheers. Thanks.